Mike Tedeschi, Portfolio Manager over at Perspective Wealth Planning with this week's market recap video. We have a ton to cover today. We're going to take a look at some of those earnings plays that we talked about in videos throughout the week. We'll take a look at the overall market. There's definitely some major key levels that we're sitting at right here. We'll jump in. We'll take a look at the U.S. dollar, commodities, and we'll also touch on bonds and cryptocurrency as well in today's video. So let's get right into it here. First and foremost, we got a 0.5% hike out of interest rates Wednesday on the Fed. And the initial move, I'm going to zoom in here, guys, and I'm going to look at this on an hourly chart for you. The initial move was a huge move up. S&P 500 finished up almost 3% for the day. It was the largest Fed move that we've seen since the 1940s. Fortunately, that was very short-lived, and the area where we failed right here at 4,300 on the S&P 500 is the resistance zone for the last 2 weeks. We were not able to push above that, and yesterday we gave back the entire move and then some. One of the worst days in the markets since the height of the 2020 crash. The NASDAQ lost a little over 6% intraday, actually, yesterday. Finished down in the fours. Nice little end-of-day pop right here. But just a horrendous move. And also, as you can see, a failure of that 13,600 level gave back the entire FOMC move. And is now sitting right there on those lows for the year, actually. I'm going to zoom back out and we're going to look at this in on a daily time frame because you guys need to see the importance of these levels. I'm going to start back here with the S&P 500. The S&P 500 has not been able to get up over that 4,300 zone since we broke down below it in the middle of April right here, and we have been trading inside this range. And this range is sitting right at that 4,100, that low of the year cluster zone, and the important area from the previous year as well. This is that major support zone. All right, we lose this, we run the risk of falling all the way back down to the coronavirus breakout high zone in this 36 to 3,400 area. All right, this is a major zone that needs to hold. It is held now for a little over a year, and that is the important area. So we are really, really watching this 4,100 level. You guys know I have talked repetitively about this here. This is the key for the overall market at the moment. The NASDAQ is actually, it made a new low for the year yesterday. And if we put the major levels on this chart the same way, you got support from here down to about 12,500, and then your next big level, again, is giving back the 2020 breakout level back down around 10,500. This zone really, really needs to hold in here on the NASDAQ. If not, again, you have that potential to open back up and give back the majority of the move that we had from that breakout in 2020. And the Dow has held up better. The Dow has been much stronger this year. Value has seen a lot more bid, so to speak, than growth here over the last year. We are also at that key crux zone in on the Dow. Now, what you'll notice is the lows for the year in the Dow are back down here, and we're up here. The S&P 500 and the NASDAQ either are trading right at that zone or actually made new lows. The Dow is still slightly above it. It's also down the least amount for the year, and it is still holding on to this zone right here. 32,000 is the key on the Dow. You lose that 32,000 level, where's that next zone of support? It's back around 29,000, and that once again is that breakout from 2020. So we are at that spot right now where we can give back the entire breakout move post-pandemic if we start losing these levels. Now the Russell's well on its way to giving back the majority of that breakout. It made a new low for the year, and we know, we've talked extensively about this. We had this beautiful tight range here of that 2,100 to 2,400 level for a year. We had the false breakout above, and then that swift move in the opposite direction, traded in this range, and once again starting to make that breakdown lower. Now, the breakdown lower here has not really gotten any legs. We're basically kind of just underneath of that 1900 key round level, right? It's slightly below here, but the bears haven't been able to really drive it down. If you lose this zone right in here, because this does look like a potential bear flag, that does open that 1700 up. That's that breakout from 2020. That's the entire move. And it is the closest of all of the indexes to giving back that full move. And we have talked extensively about the reason why we pay very close attention to the Russell. It is a good gauge of risk-on behavior. Those smaller companies typically tend to do better in risk-taking environments, and people pull money out of that area of the market, put it into what they view as safer areas of the market when times get tough. You don't want to own higher speculative names in a tough market environment, and that's why this can kind of be that canary in the coal mine. So, major indexes right at that major key level. Now, let's jump in and let's talk about some of these earnings reports that we were looking at this week, because a lot of these names were right at their key level. Did we get breakouts? Did we get breakdowns? What happened this week? Well, let's start off and let's take a look at the potash names that we looked at. Mosaic made a nice bounce, not able to get any sort of follow through, so it held on to that support, but no more upside movement. Interpotash IPI actually had a big move up and now gave this in key level that we laid out and broke to the downside. We looked at Expedia as well. Expedia right there at that zone, 142, that's the area that we laid out as the major important level. Slightly below it yesterday on the backs of the overall market pushing lower. You did not want to see it underneath that 135 zone. This chart does not look very good anymore. Pfizer held up just fine, but no price appreciation really here, guys. Right? Still just kind of trading in this zone. A little pop up, a little move down. Not a whole lot of action there. First, we took a look at AMD. AMD made this great push, made a big break, unable to get over that 100 zone. We laid this level out very clearly in the video that we wanted to see AMD get back up over that 100 if we were going to continue this move up. It made a nice rally, but right to that 100 point and then fell. Now, the nice thing about yesterday's action is it did hold on to the gap from earnings. So that's the level you want to watch now. You want to watch that 90 and that 100. Breaks underneath 90, you got that potential lows back on deck, and the major support as we laid out was right around that 75 zone. Now, also want to take a look at Airbnb, right? Pushing back down towards the lows, still above that support level. Starbucks had a very good earnings day, but gave a lot of it back. It was up 10% after earnings, had a couple of nice surprises in there. However, not able to get up and close over 82, started to fall back down. The key level on that still 72. So you can see some of these names that even did have that initial pop faded throughout the rest of the week. Skyworks back down to this major level right around 100. Horrible earnings report, dropped pretty hard there on that. Next, we want to take a look in at Marriott. Marriott actually moved up a little bit, but no real price appreciation, just kind of still trading in that zone. Generac had a nice move off of earnings back up into that 270 zone. That's where we're watching it. Enphase had really solid earnings, pulled back, and then continued to push forward. We took a look at Sedge as well. Nice move up on earnings. So the solars that had worked very, very well for a number of years, didn't really do much last year, might have a little bit of life coming back into them. Etsy had really poor earnings, shrinking growth, pulling back down. It's right at that major level we laid out, 87. That's the zone that we're going to watch. Shopify, very similar, had run up into earnings and fell all the way back down to that 400 level. This is the line we've had on the chart from the breakout back in 2019. We're watching it very closely here. That needs to hold. But that was kind of one of those themes from this week, was that these e-commerce platforms were not doing nearly as well as people were thinking. Melee posted earnings last night. Looks like it's going to open up slightly around 950, so a little bit off of that level, right around right here. That one's worth continuing to pay attention to. The other big name that reported last night was Square. Square had quite a post-earnings reaction. I'm going to zoom in here on a 15-minute. It made a big move down, a big move up, a big move down, and now it's kind of right around that flattish zone, slightly up. When we look at this chart on a bigger time frame here, it's going to open right around that 100 zone. That's that major support level, but needs to get up over that 110 area to see any sort of price appreciation there. Takeaway from all these earnings plays, we didn't really get any follow through. Most of these things are still sitting right there on that level of support. Anything that did kind of pop up really didn't get a whole lot of follow through, kind of fell back down. Just like the overall market, it's still just sitting at those key levels, and that's what we really have to continue to pay attention to. Let's take a look now in at the U.S. dollar. The U.S. dollar did make a breakout and made a new high. I'm going to back this up on a monthly chart so you guys can see this. We are now trading at, or we traded at the highest price point that we have traded at since 2002. All right, back in here, February 2002. If we get a monthly close over this zone, that does open that move up to 109 at 120. What's happened here is that dollar seems like it's kind of that flight to safety. Not a lot of things are working in this market. Bonds are not working. We'll take a look at bonds next here. Here is the 30-year bond trading at the lows from 2018. Underneath of that, the next area of support comes in at that 127 zone, and right there, we made a little bit of a bounce last night, just hanging on by a thread to these lows, but this has just not worked, right? Bonds inverse to interest rates keep rising, bonds keep falling. Stocks have not been doing well. Some commodities have been doing well. Some commodities haven't. Gold just can't seem to get going. The initial reaction off of the Fed was back up to 1900, fell back down. It's not really making any sort of price appreciation here. Silver holding on to 22. Palladium right around that 2200 level. Platinum tried to get back up over 1,000, falling back inside that range. We could take a look in at wheat. Wheat's still holding up well. Corn is still holding up well. So soft commodities are still doing well at the moment. The best performing commodity is nat gas, which is now up almost at $9. Back this up on a monthly chart. This is that breakout back test, and then this thing has just run. And again, there's not a whole lot of resistance. If we get above this zone right here, you can see there's only a couple of times where we've actually pushed up above this level. Really, really important to keep watching that. Gasoline is basically back up at those highs. I'll zoom in on a daily time frame so you guys can see that. We're basically right at that all-time high closing zone at 370. And if we take a look in at crude oil here, crude has held on to that 94, 95 level that we talked about. It's up around that 110. So some of the commodities have been working, but for the most part, the area that's been the most consistent this year in terms of going up has been the U.S. dollar. All right, it has continued to push the entire year, and actually year to date, the U.S. dollar is up about 8%, which is a huge move for the currency itself. What happens here is really, really important. If the dollar keeps pushing higher, that probably means that bonds have continued to push lower, and that the safety in the U.S., the flight to the safety in the U.S. dollar continues. That's probably not going to bode well for the rest of the asset classes that we talked about. And the other thing that we haven't touched on today, cryptocurrency. Bitcoin had that move back up over 4,000 or 40,000, pushed all the way back down off of the Fed right here, tried to get back up over that 40,000 psychological number, and then had a really rough day yesterday, right in lockstep with the NASDAQ. The major support zone goes back really from that 3,200 to 28. We posted that. The lows from the 2021 year have to hold, or this chart ends up being a long-term potential topping pattern. We take a look in here at Ethereum, right? Tried to get up over that 3,000 level, so that's its big major psychological level back down, but you can see it is still trading off of the lows of the year, and technically we do still have higher lows and higher highs over the last 6 months. So this is a small uptrend in the context of that potential longer downtrend. Which one of these is going to win out? You've got to be back up over 3,000 if this is going to continue to make that move up. And really, if we fall underneath on a closing basis, underneath 2,300 or so, right in this zone, that would kind of break the back of this chart as well, and that would kind of open up last year's lows of the years, which are back down around that 1,800 zone. We covered a lot in this week's video. The markets are at a very precarious spot here. If we do not hold this zone and make a bounce here over the next few sessions, rollover is certainly within the cards. And as you can see, almost everything we took a look at is trading at a major key level. So a major potential, change to the structure of this market is on deck. We're going to pay very close attention to everything that's going on. If you guys have any questions, feel free to reach out to me at mtedeschi@perspectivewealthplanning.com, or you can give me a call at 814-580-9881. Stay safe out there, guys. I'll see you all next week. Take care.